Oof, guys, this one is so important. Practically everyone is guilty of this one in one form or another, even serious professionals. Actually, even your boy, Warren Buffett. This is what he had to say in the Berkshire Hathaway annual meeting in '06. Coca Cola is a fabulous company that was selling at a silly price. You can definitely fault me for not selling the stock. I always thought it was a wonderful business, but clearly at 50 times earnings, it was a silly price. So Warren here is talking about differentiating the business and the stock. And he said more about this in this YouTube video, which I think is important.
Make particularly different comments than from when I was on the board, but Coca Cola is a fabulous company. Coca Cola will sell over 21 billion cases of various products, more Coke than anything else, around the world this year, and it goes up every year. It's interesting, the stock in 1997 or 98, whenever it was, sold over $80 a share when the earnings were, I don't remember what, $1.50 a share or something like that. And the earnings then were not as of good quality as the earnings are now, when they were 217 or something like that. And every year they account for a little greater share of the liquids consumed by people in the world. They make fabulous returns on invested capital. It's a business that has, exclude the bottling part of it, has 5 or 6 billion of tangible assets and makes a similar amount. So there are not lots of big businesses in the world that earn 100% pre-tax on tangible assets. And it'll be a great business, and it's been a great business. The stock got to what, in retrospect, clearly was a ridiculous level, but you can't hold the present management, Neville Isidel, responsible for that. And if the company sells 4 or 5% more units this year than last year, and the population of the world goes up 2%, it just means that more people are putting that particular source of liquid down their throats than the year before, and that's been going on ever since 1886. So it strikes us as a really wonderful business that sold at a very silly price some years back, and you can definitely fault me for not selling the stock. I always thought it was a wonderful business, but clearly at 50 times earnings, it was a silly price on the stock. So we like it. We'll own it 10 years from now, in my view. Charlie?
So Warren here is explaining that Coca-Cola is a great business with high returns on investment, with a huge moat, with more sales every year, and blah, blah, blah. But he regrets not selling it when the valuation got ahead of itself. Let's look into a more recent example with Palantir. So Palantir floated in 2020 and quickly appreciated in price. The purple line is price to sales, or technically EV to sales. The orange line is market capitalization, and the blue bars are sales. If someone bought Palantir here at approximately 75, almost $80 billion, with the idea that the business was going to grow and it has a huge runway ahead, then they would be down maybe even 75% by 21, 22, because the business is not the stock. If they bought the bottom of 22, then at the end of 22, the whole AI theme gripped markets, and Palantir has been a huge beneficiary of all that, what with their government contracts, military contracts, corporate contracts and data and all that. Then you could have bought Palantir at less than 20 billion, and it almost approached 200 billion just a few weeks ago. So the stock is one thing, the business is another. Let's explain that a bit further. So in the stock, you get current and future expectations. Sentiment is priced in. Confidence or lack of confidence affects the stock. Fear of missing out, etc. So these things and more influence the stock. In the business, what matters is earnings, prospects, risks, the future, and generally things that pertain to the actual company rather than the stock. So what we see is that while the business could be thriving, and let's just focus on sales for this video, forget about profits for now. So you see a company that has 4x'd its sales since 2019, 5 years basically. But if you bought the stock at the wrong place, your fund would have imploded by now. Your psychology would have been destroyed. But if you had the resolve and you understood the business enough to buy here, then you made 10x. So while the business compounds a certain way, the stock could compound a completely different way. This is in terms of numbers. So it's not linear, but we'll talk much more about this in the course at philomastery.com. Check the show notes for more.